and welcome to another episode of ECCB Connects. This week we're continuing our discussion with Mr. Dave Ramsumair on banking products and services. Dave, the loan process. What are the different types of loans commercial banks offer to their customers?
So banks offer a variety of loans. So starting at the largest level, we give loans to very large corporations, governments, large entities. Like the very largest employers and manufacturers and whatnot in different regions. And then you move down. You have the smaller loans to small business clients. For instance, we give loans to small business. Lots of small business loans. Then you have your regular retail lending. So we do the typical loans would be mortgages to purchase homes and to do renovations. Then you would have loans to do consumer financing to purchase things like cars, vacation expenses, to buy school books for kids going back to school, things of that nature. That would be on your personal lending side. And then other forms of lending would be credit cards. That's a form of lending. We give overdrafts on people's personal accounts and as well as business accounts, another form of lending. You have something called lines of credit, which is revolving loans where people use them and pay them down but can go back and use them at a later date without having to reestablish credit all over again.
A wide range of products.
Yeah, it is a wide range. There's something that's normally banks would tailor the loan or determine which loan type best suits the client.
Individuals have complained about the loan process. It's cumbersome, it's long, it's very involved. Take us through the process of applying for a loan.
Well, every loan situation really is different. And it depends, of course, a big corporation applying for a loan would be far different to somebody who's on a personal level applying to purchase a car, for instance. So we need to remember that and understand there's different requirements, and that would apply to pretty much every bank. So let me touch a bit then on what the ones that is more relevant in today's society probably would be the small business loans and the personal credits. On the personal credit side, some of the fundamental things that you do need to provide, and in the last program we talked about the forms and providing information. Well, loans are no different, and it is an account, and when you open an account or doing business with a new account, you're required to provide a certain degree of information and documentation. So if you were applying for a mortgage, for instance, you would probably need to provide a job letter, a pay slip, verification of where you live, probably need to get banking references. So we normally would try and do that for you, but if we couldn't get through, we'd probably ask you to get it. And those are things to name a few, right? Basic stuff that you would need to start the process as you go along. And let's say you were buying a house, you probably need to have the offer to purchase, right? You would need to have an appraisal done. So it all depends on the type of loan you're taking, right? The more complex the loan, the more documentation and the more requirements you're going to have to meet. And again, this is not because the banks want to make it difficult on you. It's because we are to follow the compliance rules and regulations and to satisfy whether it's the ECCB's auditors or regulators or our internal and external auditors when they come to see that we exercise proper due diligence in granting these loans. If you're a small businessman or business person applying for a small business loan, again, there are basic stuff, basic requirements. So you would have to have a simple business plan outlining what it is you're looking to do, why you want to do it, what research or whatnot you've done to show that this thing is going to make money, right? You would have to have a simple projection about, for the first year, how much cash you expect to receive from doing the business you're getting into, how much you expect to spend. Are you going to show a profit? Are you going to show a loss? So simple financial statements, so to speak, and of course the normal identifications, your business license, things of that nature, all pretty routine. And pretty much all banks would ask for the same thing because we follow the same regulations, right? So that's it in a nutshell for when it comes to small business and personal.
You mentioned small business, and we hear that the commercial banks in the region have excess liquidity. They have a lot of cash. However, lending is low, lending particularly to small businesses. What then can aspiring entrepreneurs do to ensure they secure funding from commercial banks?
In most cases, you do have excess liquidity right now in the region. But remember, that money belongs to somebody. It's not the bank's money. It's depositors who've put their money with us for safekeeping. They want to earn some interest on it, but want to make sure first and foremost that their money is safe and secure. So they're looking for that money at some point in the future going to be paid back to them. If banks do not exercise proper due diligence and prudence in lending people's money, then what you will have is a failed bank. Or you'll have an insolvent bank where they've given out people's money, and if it's not coming back in properly or in timely manner or being repaid as arranged, then you can't pay depositors back. And then you're going to have failed entities, like we have some examples right here in the ECCU region, where people losing their money and banks having gone under and the central bank having to step in. So that's one part of the equation. The second part is if a small business, somebody wants to get into a small business, you have to help us. First and foremost, you need to determine the type of business you're getting into. Have you researched it properly? It's not just going to happen where you show up and say, listen, I want to open up a barbecue stand in the corner, where right next door you have a guy you saw this guy doing business and he seems to be busy, so you feel you can show up there, put up a barbecue stand and make money. It doesn't work that way. There might be 4, 5, 6 other barbecue stands around, so there's a lot of competition. Or you might be buying a bus. How many buses do you have on the route? What makes you think you're going to make money? That's one part of the equation. The second part is how much money you're putting into it. As a bank, we do request that people put some equity into the enterprise that they're getting into, because you have to have some skin in the game, right? Mm-hmm. And it's again part of prudent lending that you make sure that there's some equity on the part of the owner, because if not, what is there to stop the person from just walking away? Because they didn't put any money in, right? So that's another part of the equation. Third, and probably the most important, is to go and sit down with, even it doesn't have to be a big public accountant or something, a competent bookkeeper or competent accountant. Sit down and draft out a business plan, a simple business plan, your projections, your cash flow, what it's going to look like, and take that to your bank. Start keeping records of, if you're in business already, make sure you're keeping records that can be followed. Mm-hmm. So by doing that, when you go to your bank, you have records that you can show to them and say, listen, this is why I feel I could make money. This is the record I have. This is how much I've made over the last 6 months, 1 year, 2 years. So I'm a good risk. Right? And then, they'll be a lot more open to your ideas. Banks, in general, are willing to sit with people and give them this very advice that I've just given you. I know of organizations, including mine, where we work with government bodies and various professional bodies to try and get people out to some seminars when we run for small business. Mm. And 70 people will tell me they're coming and only 10 show up. Yeah. Right? So, and I don't say this disrespectfully, it's the truth. So if you're going to get into a small business, you have to be willing to listen to the folks who can give you advice, right, on how best to present it and make it acceptable to the bankers. The last thing I'll say on that is that small businesses, they come forward with ideas and they have great ideas, but really the extra thought has not gone into it. So most businesses fail because they are undercapitalized, especially working capital. If you're getting into business, you need to have monies where you can fall back on to cover your basic expenses, your variable costs, like your rent and your the paying for for materials,
You
etc.
have to have your
Because
buffers.
you will not. It's very, very unlikely you will make money from day one. It probably takes anywhere between 6 to 12 months, more likely 12 months before you start turning a profit. So in the meantime, you need to have that fallback where you can actually help finance your business to keep it alive.
We often hear about non-performing loans, and we hear that the non-performing loans, the level at the commercial banks, the level is extremely high. When is a loan classified as non-performing?
So most loan arrangements have a repayment schedule or repayment timing that is either monthly, quarterly, whatever the terms that has been stipulated in the loan agreement. And when a bank gives you a loan and it has the stipulated repayment time and schedule, and you don't honor that timeline or that time schedule or that payment schedule, after, in most cases, after the first month is now delinquent. If it remains delinquent from anywhere between, depending on the bank, between 30 to 90 days, that's the delinquency period. Most loans, if it goes past 90 days, according to most legislative and regulatory requirements, after 90 days it becomes what is called non-accrual or non-performing. And what that means is that now, not only is interest, principal and interest, both principal and interest are at risk. But what now the bank has to be concerned about is recovering principal. Because so every time, all the monies that you make or payments that you make when a loan is classified non-accrual first goes to principal and costs that would have incurred along the way. And that is for the sole purpose of trying to recover depositors' money, right? Because now we're not worried so much about, I mean, it's still an issue and person will still have to pay it in the long run. But what is of primary focus and importance is recovering the principal monies that you've lent out.
If a customer is having difficulties repaying his loan, is there room for negotiation with the bank?
Always room for negotiation. And the best way to do it is to go to your banker right up front. As soon as you detect or you suspect that you're going to have a challenge or a problem, as one of my colleagues said just recently in a program we did around financial services and the public, helping the public understand how they work. My colleague said, don't hide from your bank. Don't run away. Go forward and go and sit with your banker and say, listen, I'm having this challenge. This is what's happening, and talk about a solution. What can you do to help you come out of the problem? Maybe they need to refinance the loan. Maybe they need to restructure it. Maybe they need to give you a moratorium on payments. And banks have different ways of doing it. But if you allow it to get into a non-accrual state or status, then it becomes much more difficult for them to help you and deal with the problem.
Customers, for the most part, do not intentionally not pay their loans, but sometimes they meet challenges and so on, and they will fall into what you call a bad credit position with non-performing loans. How can an individual restore good credit or even repair relationship with a bank after they've fallen into non-performing loans?
The first, like I said to the last question, as I answered the last question, you need to talk to your banker. Don't run away from the problem, because the problem won't go away. Go sit with them, work out a repayment arrangement that will help you along the way at some point, and if you keep that arrangement, it will restore you in good standing. Even the goodwill that you would generate from sitting and speaking with your banker and working out a solution will go a long, long way to restoring restoring your credit, with the bank.
Let's now look at credit and debit cards. We know these are used widely these days. What's the difference between these two cards?
So a debit card in its pure form, you use it to access your checking or your savings account, either through the ATM or using it to pay at a merchant, whether it's a grocery store or whatnot. And instead of having to carry around large sums of money, you can just go into the store, purchase what you need, swipe and pay right there and then, or go to the ATM, take out as much money as you need, and again, you get so it's convenience. Credit card is a revolving limit whereas a debit card, you only allowed to use the monies that you have in your account, what your balance currently is. With a credit card, you are given a limit, let's say $5,000. You can use up to $1,000, pay it down. Later on, you might need $5,000. You can use the limit. It's revolving. Okay, so it is a form of a loan and it's revolving. You pay interest on it, whereas on a debit, if you use debit from your savings, you don't pay any interest. That's your money.
And you can only use what you have.
Exactly. With a debit, you can only use what you have, whereas a credit, you can go up to the limit that you have. And both in some cases can be similar, because with debit cards, you can use, for instance, most times these days to purchase things online. Credit cards, you can do the same thing. So the banks have tried to make it as much as possible to use your debit card as a Visa card up to the amount of money you have in your account. Where possible, the credit card takes it a little bit further.
Some banks require full cash security when a customer is applying for a credit card. Why is this necessary?
In the normal course of applying for a credit card, people with good credit or somebody who is stably employed, etc., would probably not be asked to provide security for a credit card. However, if somebody is now trying to establish credit and wanting a credit card and doesn't have a credit history or background, they may be asked to secure the credit card to establish credit, right? Because it allows them to get the credit they want, and at the same time it covers the bank with the risk. Also, if somebody is trying to reestablish credit, we talked about bad loans and whatnot a while ago, and they may have bad credit in the past and they've repaid those and they want a fresh start. They might then offer the bank, or the bank might say, okay, I'll give you a credit card again. You need to secure it by cash, reestablish your credit, and down the road we look at how we can release the cash.
So it's a sense of is a sort of security.
It is security. It is security. Either you're reestablishing credit and keeping the bank safe because you had bad credit in the past and you want to reestablish your credit. So it's one way of doing it, and the other way is to help you build credit, build a credit history if you don't have any credit from the prior.
Okay. We know that, like you mentioned, credit cards and debit cards are used widely these days. With the prevalence of identity theft and scams, what advice do you have for customers with respect to how they use their debit and credit cards?
First of all, your debit and credit cards, you don't lend it to anybody. You don't share your PIN, your personal identification number, that electronic PIN. Don't share it with anybody. Okay? Even your closest friends, relatives, don't share it with anybody. That is one of the first thing that keep you safe. If you're in the ATM machine, for instance, and somebody wants to peep over your shoulder and offer to give you help, ask them to move away. Okay? If you're getting be careful the sites that you go to do online shopping. Right? Again, make sure it's reputable sites and that it's properly secured. And if you're not sure if something is secured, ask somebody to help you and make sure you get a good sense of it before giving people your information. And most importantly, beware of people sending you emails to say that we want up-to-date information and click here and fill out the information. Your bank will probably never ask you to do that. They will contact you directly or ask you to come in or give them a call. They would never ask you to click on a link and fill out information. That's called, what they call it, it's referred to as phishing, right? Where they're trying to gain access, your personal access, and to be able to get into your accounts and use it for improper means or improper activities, right? And rip you off.
Any final words to the banking community, customers?
Yeah, to our customers, to our customers in the financial sector, both here in St. Kitts and Nevis and the ECCU, I say to you, banking has evolved and it continues to change daily. Your bankers are faced with a lot of challenges in the environment that we're in. We are not trying to make anybody's lives difficult, but we do ask you to help us in this journey. So I offer to every one of our clients out there, come in to your banker, sit with your banker, talk about the problems you have, whether it's service charges, sit down and find the cheapest way of getting your transactions and your business done. Ask them for the best packages available and what works for you. If you're having problems with security, you're having problems with loans, come sit down and talk to them. All right, and you'll find that they all want to be, they will be there for you, and they want to help you through this difficult time.
Dave, thank you very much for speaking with us on
It's
ECCB
been an absolute pleasure. I thank you.
To view any episode of ECCB Connects, anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
Here's where we end this week's episode of ECCB Connects. Remember to go in and talk with your banker about the products and services that are available to you. Join us again next week for another exciting program.